Oracles. Today I'm just going to give you a quick synopsis of some of the big earnings that we've had over the last couple of days. I'm not feeling all that great, so I'm just going to kind of run you through the numbers. So at least if you're looking for what the EPS expectations were, what the actuals were, what they actually beat or missed by, any other significant news for a few of these companies, I'll share that with you guys here just so you can kind of get it all in one place in a very quick format instead of having to go search for it like I did. Hopefully it'll help you guys out and find it all. So I'll give you a list of it. I think it's about 10 stocks I'm about to go through right now. Some of the bigger players that were going on over the last couple of days, how their performance was as well. And again, any other significant news that kind of went along with it. So before we get into that, please make sure you hit that like button down below, subscribe to the channel. So let's dive right into this now. So one of the first big things in the news is Super Microcomputer, SMCI. Seems like they might have some fraud issues going on over there with their accounting. And the stock was down over 30% on the day. So this is not a stock that I owned. It's not a stock that I've ever owned. I don't plan on ever owning this stock. But having that news come out talking about how they've been showing that they're profitable, but they really aren't profitable, and they're doing a bunch of audits on this to find all of that information out, kind of gives you a little pause about the actual AI movement and what's going on. Were they actually doing as well as they are? Is AI doing as well as it is? I think AI is obviously going to do fine. I think they're going to be basically the next internet that comes out over the next several decades. But when it comes to the actual moment in this company in particular, is this one of those situations sort of like the dot-com bubble where we have some fraudulent accounting principles that are going on right now, showing us numbers that they're profitable and they're really not? Again, this is only one company. We don't know what's going on in other places, but just something to pay attention to that's on the radar, and we'll see what goes forward when it comes to SMCI. Next up, we've got Visa, one of my absolute favorite stocks that I own. Their EPS expectations were $2.58 per share. They came in at $2.71 per share. That was a beat of 5.24%. They also increased their dividend from 52 cents to 59 cents. That is an increase of 13.5%. Absolutely love this company, love this stock. Again, it is one of my top 5. If you guys want to check out the video of my top 5 dividend growth stocks, that is up there with American Express and MasterCard as my top 5. I lumped all 3 of them together. And now Visa did announce that they're going to be cutting 1,400 jobs by the end of the year. So when we're starting to look at these unemployment numbers and then questioning, hey, are we going to be getting a recession next year? What's going on with the jobs report? We are going to be getting unemployment data coming out on Friday. And now looking at Visa, a company that showed very strong earnings and very strong numbers, still cutting 1,400 jobs, kind of gives me a little pause and say, let me just make sure that we are in a good place when it comes to the economy and unemployment before I really go crazy when it comes to adding to my stock portfolio. I am working on level 1, step 10 right now. I just bumped everything up. So I'll be adding a bunch more to my stock portfolio as it is. I've hit that 10% cash level. I'm going to be adding more to a lot of my positions, and I'm looking to complete level 1 by the end of this year. I'll keep you guys posted on that. And so next earnings, we have AMD. They had a slight beat on their EPS of 0.46%, but apparently that wasn't good enough, and the stock dropped 10.6% on the day. Then we had Google that reported their earnings yesterday. They had expectations of $1.85 per share. They reported $2.12 with a beat of 14.74%, and the stock is up 3%. We've got Eli Lilly. They had EPS expectations of $1.47, and they came in at $1.18, missing by 19.5%. The stock dropped 6.28% on the day today. They were actually down more than 10% on the day. I actually sold my position there. I'm not a huge fan of when it comes to the pharmaceutical industry. There's way too much at play there. If a drug isn't selling well, if all of a sudden they lose their patent protection, if they've got a drug that's in the pipeline, but all of a sudden it doesn't get approval. Too much uncertainty for me there. I liked Eli Lilly in the beginning. They were a very hot stock, and I think they're going to be perfectly fine from here. But a few of the drugs that they've got out there aren't performing as well as expected. So for me, I decided, you know what? I am looking to consolidate. This was my excuse to sell. I ended up making 8% on the stock, so I still ended up making a gain on it, but I ended up selling out. They rebounded a little bit. I sold it around $826. They finished around $846. Not a huge concern for me. I only had half a share. Again, this is why I'm kind of looking to consolidate. I'm spread pretty darn thin in some areas. So just decided to drop that one. That's what helped me bump up to that 10% cash. And now in the same sector, we've got AbbVie, which did actually well. And I own AbbVie as well. And this one I did hold on to. They had expectations of EPS of $2.92 per share and came in at $3 per share, which is a beat of 2.82%. That stock was up over 6% on the day. So AbbVie, I love as well. I think both of those are very good companies. I don't think you can really go wrong with either of them. I just chose to keep AbbVie and I decided to dump Eli Lilly. So for me, AbbVie has been a stronger position for me anyway. I have more shares in that company. I'm just going to continue building it from here. And they've got some very strong drugs that are coming out now that they lost patent protection on one of their other drugs. And Skyrizi, I hear commercials for it on TV all the time. Obviously, that advertising has been doing well and has been pushing that company forward. So I'm going to keep my eye on this one as well, as it is a pharmaceutical. And I do have United Healthcare in the health space. So I still do have some diversification there. But I'm just going to keep those two as my plays right now, and we'll just kind of monitor it going from here. Then we had Microsoft that came out tonight after hours. They had expectations of $3.10, and they came in at $3.30. Microsoft is basically like clockwork. They basically beat earnings every single quarter, in and out. They don't miss. That's just how Microsoft rolls. With that said, despite the fact that they beat by 6.29%, the stock is down over 4% after hours. They report strong numbers, and then they dip. So for me, when it comes to things like that, that could be a time to buy. When a good company like Microsoft is dipping, maybe it's a buy. Or maybe they just ran up a little bit more and they're just kind of cooling off a little bit, and this is a sell the news situation. I've said it in the past. For me, historically, whenever I have bought a company after a sell-off after good earnings, it has usually rebounded shortly thereafter, and I've made some short swing trade profits. I am not going to do that this time. I'm not suggesting you guys do. I'm just saying historically for me, that has always worked. But in this case here, it is not dropping low enough for me to add it to my portfolio yet. I'm just going to keep an eye on it. But again, seeing these good earnings just gives me that confidence that Microsoft is that company that is going to continue beating earnings every single quarter. Next up that came out after hours is Meta. They had expectations of $5.29 per share, and they came in at $6.03. That is a 14% beat, but even they were down 2.5% after hours. So again, another great company that maybe just was a little too hot going up into earnings. They beat those earnings, and it's a little bit of a sell the news situation. Again, this is not a company that I plan on selling. I'm not at a position to be purchasing any more of it right now, but I'm just going to pay attention to it going forward, and I will keep on adding to it as my portfolio tells me to. Now, last on the list, and another one that I might end up selling, I'm going to do some research, might be on the chopping block, is CAT. Caterpillar had expectations of $5.35 per share, and they came in at $5.17. They missed by 3.44%, and they're down by 2%. So for me, it's an industrial. I like it, but I kind of picture it sort of like a Tesla, where Tesla underperformed over the last couple of years because of higher interest rates. CAT also gets affected by higher interest rates. Now that interest rates are starting to come down, maybe CAT is going to turn things around. So perhaps this could be a good buying opportunity, and maybe instead of me selling, I should be buying. Again, this is why I want to dive deeper into the numbers, just to make sure that this is a smart play and make sure I'm doing the right thing. And maybe I just hold and do nothing. But again, this is one of those ones where I don't want to make a quick decision. I do want to dive into the numbers a little bit deeper. And the last one I wanted to mention is SoFi, one of my absolute favorites. That is one of my favorite growth stocks that I own that is not a dividend payer. And SoFi came out with great earnings. They beat EPS by 25%. Their expectations were still low as they just became newly profitable last year. So the expectations were 4 cents per share, and they came in at 5 cents per share. That's still absolutely amazing to see. Their growth is outstanding, and they even raised their guidance for the future. Now, when that happened, they still sold off significantly. Now, don't forget, we saw a massive run up when it came to SoFi over the last week. So this could have easily been a sell the news situation, but they rebounded quickly and came all the way back and hit a 52-week high again today. So again, paying attention to this, they sold off after good earnings, rebounded right back up to where they were and even higher before they had their earnings. So again, if that was something that you were going to be swing trading, those timings of it are something to pay attention to. It's not guaranteed to happen every time, but you would have made some very nice profits on that. Would have had that buy-in around that $10 mark, and it bumped up to $11.50 today. So just saying, pay attention to things like that. If you guys are a swing trader, I love SoFi long term, and I think this is a great sign for the company to show that they're still pushing forward like this, beating their earnings already, and now they're kind of getting themselves on a pace to growing that profitability. They have profits now, just like with your own budget. If you finally get yourself in your own budget to a point where you're profitable and you have some free cash flow coming in, that means you can pay off your debts even faster. You can invest that money into your portfolio to grow your net worth even faster. Whatever it is, you now have that extra money to do positive things with your business versus falling backwards. This is the place that SoFi is at right now. They can now take that money and pay down those debts. They can grow their business in other areas as well to increase the revenue even more, thereby increasing their profits even more and speeding that process up. So awesome to see with SoFi. Love the company, love the platform. I cannot speak highly enough about this company and the platform. Just absolutely love it. So that's all I've got for you guys today. Again, just wanted to give you a quick synopsis. I've got to go get some dinner and go to bed. I'm not feeling all that great, but I appreciate you guys being here. Don't forget to hit that like button down below. Subscribe to the channel. Thank you so much. Have a great one.